Welcome back. You're tuned into Editors Roundtable. Well, the earnings are going to be key focus. And, just to take a bit of a cue, we're getting into a weekend. You must enjoy partying. But when you're partying and you're getting a little bit high, then you need to be careful, right? Similarly, the Nifty at these elevated levels, it's moved quite high. So the margin for error is very limited. And I say this because India, MSCI India Index, well, it's way above what the MSCI world has done. And you'll see the gap has widened out there. Valuation-wise, we already know we're trading at around 22 times odd. If you look at the market cap with GDP as well, those ratios, well, they're sky high. So that's telling you that valuation-wise, well, we don't have any much comfort. And in addition to that, earnings have been scaled back by only around 5% so far. Normally, if you already saw a big scale back in earnings, you'll say, how much of disappointment can we get? So just in this sort of a backdrop, on the Nifty earnings, well, it's up in mid-single digits odd. However, if you look at the NSE 500 companies, out there, there's a bit of a disappointment. And I say this because, out of the 500 companies, 151 companies have delivered an earnings degrowth. So that's a third of the NSE 500 companies, they have given a degrowth. The net earnings, in fact, is down by closer to around 3%. And X of the banking and financial institutions, well, it's actually down closer to around 25%. So the breadth of the market actually hasn't been that great. And the earnings as well hasn't been that great. Though on the Nifty earnings, it's been pretty good. In addition to that, if you're looking at the growth of some of those companies out there, you'll see 44% of the companies, they delivered their best ever quarter in terms of revenues. However, only 22%, that's half of them, delivered their best EBITDA performance in a single quarter. So that's telling you as well that the broader markets out there, the growth hasn't been good on the earnings parameter. Next up, the cash flows. The operating cash flows, well, they have started deteriorating because of deterioration in working capital. And that should come up for you on the screen as well. And that's something that could weigh on corporate capex going ahead. And finally, 60% of the BSE 200 companies, well, out there we did see that the working capital did see some bit of deterioration. So there are some cautious signs out there. As I said earlier, when the Nifty has moved high and you're getting a little high, it's time to be a little bit cautious. So, that's something that, in fact, Pankaj Tibrewal had spoken to us at the start of this week. I just thought I'll drive that point forward. Back to you guys.
All right, that's very interesting, Nigel. Thanks very much for that. Let's put this to Ashwin Agarwal, who's now joining us right here. Ashwin, it's always a pleasure. Great to see you.
Thank you.
Again
Thank
on
you
the
for
program.
having me here.
I mean, some points on overall corporate profitability and how it's been a mixed kind of a picture.
Yeah.
What's your sense and how would you look at this?
So, you have to actually get a bit deeper into the weeds, because what's happened is that there have been a lot of cost pressures on account of raw materials, on account of energy, on account of transportation. And some of these cost pressures are visible in the earnings that you've seen over the last 2 quarters. But some of these places, you will see an improvement in margins going ahead because some of the high cost inventory of raw material has been now exhausted. Some of the supply constraints have gone away. Transportation costs globally have started to come off. So some of these benefits will start to come through. Of course, what you will also see is some of the export demand fading away. That will happen. But on the whole, when you look at the aggregate numbers, they hide as much as they reveal. So I would actually go a little bit deeper and say that situation may not be as bleak as some of the aggregate numbers suggest.
Ashwini, you made a very interesting point in the break that you're not too overly cautious on the market.
Yeah.
And like lever in the last 10 years, India's multiple will keep re-rating.
That's right.
Can you just take it, just to explain our viewers, what do you mean by that and how you think the markets are going to be in 23?
So I have this philosophy that in markets, whatever is in scarce supply goes up, right? Over the last 12 years, quality was in scarce supply, growth was in scarce supply. So the multiples for these 2 factors just went through the roof. In a global context, India is now in a situation that it's one of the few areas where there is no macroeconomic imbalance, there is growth coming through. So the relative outperformance of India is explained by that. And in that sense, to look at valuations alone, maybe making the same mistake that people like us did as value investors by ignoring levers about 5 or 7 years ago, and the valuation kept expanding and we kept thinking, why? And that might come through for India as well, unless some macroeconomic accident happens to us or energy prices again go through the roof. So, I'm assuming that macroeconomics for India will continue to remain stable, and if they do, then I think valuations is something that investors will choose.
Although there is one small difference, last 5-6 years, interest rates, the risk-free rate of the world, the US 10-year was 0% or zero bound.
Right.
It is 5%,
right.
or closer to 5% now, right? and it's not going to go back to zero.
Correct.
In the next at least 2 years. I mean, we don't know, so I mean, should we expect the same kind of valuation re-rating that you're talking about with regards to HUL?
So you have a great point. So you can't obviously expect that level of valuation re-rating, and interest rates will continue to go up from here by at least another 100 basis points over the next couple of quarters, both in India and in the US, is the general consensus that one hears. But at the same time, what I'm trying to say is that focusing only on aggregate valuations may be a mistake, because those aggregate valuations again have disparities within them. So I'm saying that India is in a great place. There are plenty of good bottom-up stories out there. There are one-off earnings pressures which might go away over the next couple of quarters. So I wouldn't be too bearish. Yes, a correction is possible. Markets look expensive. Individual stocks may be looking expensive. It's like this. You know, over the years, I've started to see valuations in the context of history. Yeah. So if you look at valuations in context of history, they're expensive at an aggregate level. But individual sectors are not expensive, individual stocks are not expensive, and that's the only caution I would provide to an overly bearish view.
Yeah, no, and Ashwini, a very valid point. I mean, to justify India's move, we have had billions of dollars of sale from the FIs, and yet we have stood our ground. Not
Correct.
just that, I mean, we have a stable government now, and crude oil prices have cooled off as well. So those factors are moving in our favor. My question to you is, earlier in the show, we were discussing about these new age themes.
That's right.
A lot of supply coming in there. November rain. It rained, but it got absorbed as well.
Absolutely.
What's your sense on these new age themes? Are they coming to some level where they'll generate interest, or do you believe there is still some pain ahead?
So very difficult to say. As you said, that valuations are now in the ballpark of being interesting. Okay, now whether you see another 20% drawdown or 30% drawdown, nobody can say. Yeah. Okay, that's impossible to say. But last year, towards the end of last year, at least when we were looking at some of these companies, we had no idea where the valuations were coming from, and we kind of stayed away from investing in any of them. And now I am looking at them. Have I invested in any of them? The answer is no. But am I looking at them? The answer is yes. I'm looking at them. They're looking very interesting. I don't know where the bottom is, but they're looking very interesting.
You want to give us a hint? Which side are you drifting among those five, six names?
I'm not allowed to speak about stocks.
All right.
All right, Ashwini, great conversation.
Thank you
Short,
so much.
but we look forward to seeing you more in person.
Thank
Thank you very much and enjoy your weekend. Well, guys, with that, it's a wrap on this edition of Editors Roundtable from the entire team. Thank you for watching, but don't go anywhere. On the other side of the break, more news and updates will follow.